Welcome to the newest entry in our Foreign and Comparative Law webinar series. My name is Jenny Gesley, and I'm a foreign law specialist here at the Law Library of Congress. And today I will be talking to you about central bank digital currencies, the future of the monetary system. Just a few housekeeping announcements at the beginning. We asked you that you please use the Q&A feature to submit your questions. I will try to leave time at the end for Q&A. And hopefully we'll get to all of your questions. If we don't have time to answer all the questions, you can also use our Ask a Librarian service. And I have the address for that on my last slide. So you can use that feature, or also if after the webinar is over, you have another question, you can submit those questions using that service. If you have trouble with your computer audio, you can also switch to phone audio. And I would also like to point out that this session is being recorded. Okay, so let's get started. This is the outline for my presentation. So I will start with some general definitions so that we're all on the same page and we all know what we're talking about. Then I will talk about central bank digital currencies in general. I will give an overview of the definition, certain design concepts, some benefits, advantages, risks associated with that, what the progress has been so far, but in more general ways. And after that, I will talk about specific examples from jurisdictions around the world. I will talk about some advanced economies, about some emerging market and developing countries, and we will see how much progress they have made and how they've structured the CBDCs that are already out there. And like I said, at the end, hopefully there will be time for Q&A. So technology and digitalization are changing the way we pay. The COVID-19 pandemic has actually only accelerated that trend from cash, away from cash and to digital payments. And we all know cryptocurrencies such as Bitcoin are experiencing all-time highs. However, we've also seen the volatility of cryptocurrencies when, for example, the price of Bitcoin just last week dropped by almost 30% after there were concerns about tighter regulations in China, and then Tesla's announcement that first that it would accept Bitcoin, then that it would not accept Bitcoin anymore. And then I saw that Elon Musk just recently tweeted again, which had an effect on various cryptocurrencies. So we can see there's a lot of volatility in this area. Actually sometimes called the Tinkerbell effect, if you've heard that term before. That means that the price will fall and rise depending on what people believe it's worth. So that if they believe, for example, now you can use this means of payment, it will be worth more, and if not, then not. And central banks are taking note of this development, that people are moving away from cash, that privately issued tokens are suddenly used as means of payment. And one of the main functions of central banks is to ensure monetary and financial stability in their respective jurisdictions and to promote broad access to safe and efficient payments. So, and a core instrument by which central banks achieve all these objectives is by providing central bank money. And traditionally, though, central banks have limited access to digital account-based central bank money. Those are also known as reserves or settlement balances. So they've limited access to banks and certain other financial public institutions. By contrast, physical central bank money, so cash, is widely accessible to the public. But in some jurisdictions, as I already mentioned, the use of cash is decreasing with the possibility of its complete disappearance. For example, Sweden would be a prime example of this. And this would imply that the public no longer has wide access to central bank money. So, and that's one point where central bank digital currencies come in. But I should say that reasons for adopting central bank digital currencies, or CBDC, and the different design choices, they really depend on many different factors. And they're also different in each individual jurisdiction. And we will look at all these reasons more in detail later on. There's also differences between emerging market economies and advanced economies for adopting a CBDC. So let's talk about some general definitions. So first of all, we'll start with the basics. What is money? And money is really defined by its functions. So money has three basic functions. One, it's a means of exchange. That means that it's anything that is widely accepted as a means of payment. Two, it's a unit of account, which means it's a standard measure of value that allows us to compare the value of things. And third, it's a store of value, which means it's an item that holds the value over time. And money actually differs from other stores of values because it's readily exchangeable for other commodities. So we see from this definition, though, money can actually be anything that fulfills these basic functions. So it doesn't have to be coins and paper money, which is what we normally think of when we think about money. We think, coins and paper money. But it could be for anything, for example, cigarettes in prison, so I heard, is used as money there. It's also not risk-free store of valuable money. Inflation reduces the value of money. And if we have times of rapid inflation, people may not want to rely on money anymore as a store of value. So they may turn to other things, commodities such as land or gold. So what are the types of money that exist? There's really only two types of money. So money with intrinsic value and then money without intrinsic value. So money with intrinsic value is also called commodity money because it's backed by commodities such as gold or silver. So it's money that has value apart from its use as money. The problem, though, with commodity money is that the quantity can fluctuate radically, and it also may vary in quality. An example for commodity money is the gold standard, which is a monetary system where a country's currency or paper money has a value which is directly linked to gold. That was, for example, the case in the US up until 1971, when the US abandoned the gold standard. And currently there's no countries that use the gold standard anymore. Then we have money without intrinsic value. It's also called fiat money. Fiat is Latin and means let it be done. So this is just money that some authority, which is generally the government, has ordered to be accepted as a medium of exchange. So it's not backed up by a commodity, but by the full faith and credit of the authority that issued it. And you've probably heard that term. So currencies nowadays, the US dollar, the euro, those are all fiat currencies. I'm saying currency is the coin and paper money of a country that is designated as legal tender, which circulates and is customarily used and accepted as a medium of exchange in the country of issuance. We should also define legal tender while we're at it. This is the money that's designated by law as well as legal offer of payment for debts when it is tendered to a creditor. If you've ever looked at a dollar bill, for example, it says it on there. So if you want to take a look at that. So now we're getting closer. Digital currencies. What are digital currencies? Or digital money? This is really any form of money or payment that exists only in electronic form. So for example, deposit at banks. We all, most of us probably have a bank account with a commercial bank. So this is a digital currency. Then we have virtual currencies. And I put that in quotation marks to differentiate it from currencies that we just talked about. And how are the virtual currencies defined? There isn't an official definition, but there are several definitions that are very similar. And I'm going to take the definition from the European Union, though that's actually one that is in the law there. It says it's a digital representation of value, which is not issued or guaranteed by a central bank or public authority. It is also not necessarily attached to a legally established currency, and we'll see some examples, or some exceptions there in a little bit. It does not possess a legal status of currency or money, but it is accepted by natural legal persons as a means of exchange, and it can be transferred, stored, and traded electronically. The IRS in the United States has a similar definition. The IRS defines virtual currency as a digital representation of value, which functions as a medium of exchange, a unit of account, and or a store of value. So when we talked about the definition of money, that's what we hear here. But they say, IRS says, in some environments, virtual currency may actually operate like a real currency, but it does not have legal tender status in the US. So what are cryptocurrencies? Cryptocurrencies are a type of virtual currency, but they use cryptographic algorithms to validate and secure transactions. And those transactions are digitally recorded on a distributed ledger, such as a blockchain, and they're very volatile, which we already talked about. And the question here really, are they money? Are they widely accepted as a medium of exchange? That's really the question that's normally debated there. We know Bitcoin is probably here to stay, as more and more used, but it's still not widely accepted as a medium of exchange. So we'll see how that goes. And that's probably more an academic discussion. Then I would also like to define stablecoins, because that's also important in this regard. Stablecoins are a type of cryptocurrency that is backed by sovereign fiat currencies or other safe assets, such as the US dollar, to stabilize their value. So they want to counter the volatility of cryptocurrencies. And most of the stablecoins that have been issued are pegged to the US dollar. So in this regard, we also need to mention cryptocurrencies backed by corporations, because those are actually one of the reasons that have been cited why central banks should get into the business of issuing digital currencies. So one of the examples that probably the most important one that people heard about was Facebook's Diem, formerly called Libra. So this will be cryptocurrencies backed by corporations are backed by the asset reserves of the institution that issues them. And Facebook obviously has lots and lots of users, millions of users. So that would be quite some competition for central banks. So I would like to go to a little bit more detail here, just so, because like I said, it's a reason why central banks might issue central bank digital currencies. So Facebook was originally planning to get a payment system license in Switzerland from FINMA, the regulator there. But those plans were abandoned, and now they decided they will move the operations to the United States and only issue, for now at least, a dollar-backed stablecoin. Diem initially proposed a universal currency tied to a basket of major currencies and government debt, but then they switched to multiple stablecoins after criticism. And in the US now, the exclusive issuer of Diem US dollar will be Silvergate Bank, which is a California state-chartered bank. You might be wondering why this state-chartered bank will be issuing the stablecoin for Facebook. Well, in July 2021, the Office of the Control of the Currency released a notice which letting banks provide a variety of services for assets issued on a blockchain, especially stablecoins. And it's also been reported that Diem will launch a small-scale pilot later this year. So we'll see how the public reacts to it, if it will be, if they trust Facebook enough, or if this project will actually happen. And it will be quite interesting to see. So let's move on to our topic today, central bank digital currencies. So what are central bank digital currencies? So there's no official definition of what they are. They're a new form of central bank money and would fulfill all the functions of money that we talked about at the beginning. The Bank for International Settlement, which is also often called the central bank of central banks, in 2018 defined central bank digital currencies as a digital form of central bank money that is different from balances in traditional reserve or settlement accounts. So they say it would be central bank issued electronic money. It would be denominated in the national unit of account. That's also important. So if it's a foreign currency, that wouldn't be a central bank digital currency. And most importantly, it would be a liability of the central bank. Even if it's issued through intermediaries, it would be a liability of the central bank and not of the intermediary. And because of all this, there would be low volatility. And in connection with that, you might have heard some academics or commentators talk about synthetic CBDCs. But those are not actually central bank digital currencies. So what are they? So it's been suggested that private sector payment service providers could issue liabilities, and those would be matched by funds held at the central bank. But here you see it wouldn't be a CBDC because the end user would not hold a claim on the central bank, but it would be a claim on the intermediary, the private sector payment service provider. So even though they're called synthetic CBDCs, they're not actually CBDCs according to the definition that I just talked about. So it's the progress so far on CBDCs. The data is from a survey that the Bank for International Settlement published in January 2021. That's actually already the third survey that they did on central bank digital currencies. And they found that it was conducted among 65 central banks. And they found that 86% of survey participants are actively researching the benefits and drawbacks of CBDCs, with 60% conducting experiments or proofs of concept, and 14% are moving forward to development and pilot projects. And what was also very interesting is that 7 out of 8 central banks that were in advanced stages of CBDC development were in emerging market and developing economies. And like I said, I will talk about some specific examples in the third part of this presentation. So this is just the general numbers, a general overview. So what about consumers? Is the public ready to adopt CBDCs? What's the most important thing for digital payments is really public trust. And I found a global opinion poll that was conducted in between October and December 2019 by the Official Monetary and Financial Institutions Forum on public trust in monetary institutions, payment characteristics, and digital currency across 13 advanced and emerging countries. And they found that in almost all countries, the respondents indicated that they would feel most confident in digital money issued by the domestic monetary authority, so the central bank. They also globally expressed actually a lack of confidence in digital money issued by a tech or credit card company. And that was particularly true for respondents from advanced economies. So that sounds like Facebook's DM would not really have a chance if central banks decide to issue central bank digital currencies. Then it was also interesting in the survey they found that across all countries, respondents were unanimous in citing safety from fraud and theft as the most important feature of digital currencies. And then second were privacy protections. And speed was actually the least important characteristic. So that's something that central banks need to keep in mind when they design their central bank digital currencies. And in general, emerging market respondents were much more open to digital money than their advanced economy counterparts. And there were also some differences depending on income, then also depending on age, and then level of education played a role. So what are some of the design choices? And this is just a very high level overview. So first of all, we have to decide, should it be widely accessible or just restricted access? Then the degree of anonymity could be ranged from complete anonymity to no anonymity at all. Operation availability ranging from current opening hours to 24/7. Interest-bearing characters, yes or no. And I will talk about this problem later. Interest could make them more attractive and similar to deposits, but they could also have influence on commercial banks. So we'll talk about that later, though. And then connected to that is the question: will there be limits or caps on individual holdings? So those are just some of the considerations that central banks have to look into. So there are really 2 models under discussion. So one is a wholesale CBDC, where access would be limited to a predefined group of users. And then we have the retail CBDCs, which are also called general purpose CBDCs, which would be widely accessible. So the equivalent, a digital equivalent of cash for use by end users. And I will focus on the retail CBDCs for this webinar, because that's the most interesting for our purposes. I would like to note a lot of central banks have done advanced research or advanced stages of development of wholesale CBDCs, but this is unfortunately beyond the scope of this webinar. So what are some of the reasons for a central bank to adopt a CBDC? We already talked about declining cash usage in some jurisdictions. So that could be a factor, especially for emerging markets and developing economies. Improved financial inclusion for unbanked or underbanked communities is a factor, like the most important factor, basically. Then in general, the interest in technological innovations for the financial sector, making payment systems more efficient, fast, instant, that could be a reason. And then what we talked about, the fear that central bank money in transactions will be replaced with private digital tokens like Facebook's Diem. The question here is really the problem that they're volatile. There's inadequate consumer investor protection. So central banks really need to look into this so they can still fulfill that role. And then there's also the risk of so-called digital dollarization related to cross-border CBDCs. So what do I mean by that? The term dollarization is normally shorthand for the use of any foreign currency by another country. So let's assume, for example, in the United States, Canada issues a CBDC that's highly liked by people in the United States, and suddenly everyone uses the Canadian CBDC, no one uses the US dollar anymore, and that would have an impact on the Federal Reserve's ability to conduct monetary policy and ensure financial stability. So that's definitely something that central banks are aware of and that they need to look into. So, and also, what are some of the legal, economic, technical considerations that go into developing a CBDC? And this list is by no means complete. I just put a few questions on here. The most important question probably is, does the central bank actually have the legal authority to issue a digital currency? And connected to that is the question, what will be the legal tender status of CBDCs? The BIS survey from 2021 that I talked about at the beginning found that 26% of the central banks do not currently have the authority to issue a CBDC, and 48% were unsure whether or not they would have the legal authority. So in those cases, it's probably the way the statute or wherever they get the authorization from is phrased in such a way that it could be interpreted like that, but maybe not. And the question with regard to legal tender status, if it should be replacing or be equivalent to cash, then it would need to have legal tender status. Another question is compliance with anti-money laundering and counterterrorism financing requirements. And connected to that is the question of privacy considerations. So this is a particular concern with regard to anonymous CBDCs. Which I already talked about before. This is like one of the design choices. Should it be completely anonymous, or should there be no anonymity, or should it be somewhere in between? That's the fear that CBDCs might be used for illicit purposes if they are completely anonymous. On the other hand, people prefer cash, among other things, because of its anonymity. So CBDCs would have to be designed in such a way that they provide something equivalent. Then there's also the problem that there might be so-called digital run, flight from commercial banks to central banks in times of crisis, and the risk of disintermediation of commercial banks. So what do I mean by that? We've all heard of bank runs. So during a systemic banking crisis, holding risk-free central bank issued CBDCs would be suddenly vastly more attractive than bank deposits. So there could be a sector-wide run on bank deposits to CBDCs. So this would magnify the effects of the crisis. So yeah, a digital run. And the problem of disintermediation of commercial banks. So it really depends on what households will do. So if they substitute banknotes with CBDCs, then the central bank and commercial bank balance sheet will not really change. But if they, however, replace commercial bank deposits with CBDCs, then the extreme version, the digital run, then this would imply a funding loss for commercial banks. And this could lead to disintermediation of the banking sector. So this in turn would result that banks would have to try to offer better conditions on their deposits in order to protect their deposit base. But this then would imply higher funding costs for banks, which would be passed on to consumers. So you see, there's a lot of things that banks, central banks have to think about. There might also be risks to central bank independence if they have a greater economic role. What do I mean by this? During emergencies, it has been suggested that a central bank could agree to act as a government agent and execute CBDC fund transfers on the government's behalf to individuals and businesses. So for example, now during the COVID-19 pandemic, it has been suggested to use CBDCs to deliver stimulus packages to households and businesses. This also, I mean, you might have heard the term helicopter money. So this is what that is. But the problem here is helicopter money is a form of fiscal policy. And we need to separate monetary and fiscal policy in order to ensure central bank independence. So there should not be influence of politics on central bank. There should not be pressured to do certain things. So that's certainly something to keep in mind. And then in general, like that opinion poll that I mentioned showed, cybersecurity is a big issue because people are afraid of fraud and theft. So that definitely needs to go into the design of a digital currency. And then in general, also what technical solution will be chosen for the CBDC is a question. So it could be the central bank could issue a digital currency token that would circulate in a decentralized way without central ledger. It could use DLT technology such as blockchain. The problem is really all those new technologies such as DLT. Because they're new, we don't know as much about them yet. How robust are they? Central banks have been experimenting with them for a while, but they still don't know enough about it. So that's also something to keep in mind. Other ways to, for a technical solution for CBDCs, there could be deposit accounts with the central bank established for all households. And then the actual servicing and technical maintenance of the accounts would probably be assigned to one or several third-party providers, because otherwise central banks might be overwhelmed by this new task because they already have enough to do. So after all these general remarks and general consideration, let's look at some examples from around the world and what some of the countries have decided with regards to those design features. So I would like to talk about first about the Bahamas, because on October 20th, 2020, the Central Bank of the Bahamas launched the first worldwide retail CBDC. It's called the Electronic Bahamian Dollar, or also dubbed Sand Dollar. And they say its main purpose is to promote more inclusive access to regulated payments and other financial services for unbanked and underbanked communities and socioeconomic groups within the country. So that's also what we saw, that this is the primary motivation for emerging market and developing economies to issue CBDCs. And in the Bahamas, the central bank didn't have the authority to issue electronic money or to make it legal tender. So that's why the Central Bank of the Bahamas Act had to be amended, which they did in 2020. And I put the legal basis here on the slide. So Article 5, paragraph 1H says that the functions of the bank are to issue and manage the currency. Paragraph 1p then says the functions are to regulate and oversee the issuance, provision, and functioning of payment instruments, which includes the issuance of electronic money. Then Article 1, Paragraph 1 clarifies that the currency of the Bahamas comprises notes, coins, and electronic money. And then Article 12 says that all notes and electronic money are legal tender. So it addresses all these issues. Sand dollars are then stored on digital wallets, maintained and offered through so-called wallet providers. And I will talk about what they are in just a second. So the Central Bank of the Bahamas Act, Article 15, authorized the central bank to make regulations for the digital currency framework. And public consultation on those draft regulations took place from February 15th to March 31st, 2021. The central bank announced on their website that the finalized regulations would be issued by May 1st, 2021. However, I have not seen them published to date. They will probably do it soon, or I've just not seen them yet. So what do the draft regulations cover? So first of all, who qualifies to be a wallet provider? So they said that it's 4 groups: commercial banks, cooperative credit unions, money transmission businesses, and payment service providers. And as of mid-March 2021, 9 wallet providers have completed the cybersecurity assessments of their technology systems and have been cleared to distribute the CBDC. So, and they either use those wallet providers, they either use the Sand Dollar app, which has been developed by the central bank, or they can use their own proprietary mobile apps. And all those wallets though must have multi-factor authentication features. And no matter which app they use, they must be interoperable, or they will be at least in the future. All wallet providers must complete a robust and intensive cybersecurity assessment by an independent international firm before they can receive approval. So they're really addressing here the fears of consumers that their privacy will not be protected or that their data will not be protected. What else do the draft regulations cover? The application process to become a wallet provider, minimum standards of interoperability, what I just mentioned, then consumer protection aspects, financial stability, financial inclusion, because this is really the main purpose of the CBDC in the Bahamas, several obligations of wallet providers, wallet limits, and then enforcement powers. So yeah, with regard to financial stability, so remember that we talked about disambiguation of commercial banks, risk to financial stability. And what they did in the Bahamas to counter these fears is they said to constrain the ability of the Sand Dollar wallets to substitute for deposits at commercial banks. The central bank would be empowered to limit the amount of the digital currency that individuals, businesses, and other non-supervised financial institutions can hold. And also no interest would be paid on digital currency held in mobile wallets. On the other hand, limits on the currency also have a problem if you want them to be equivalent to cash. That could also be a future problem, but I guess we'll see how it plays out in the Bahamas. Other Caribbean jurisdictions are also very advanced already with their CBDCs. And that just confirms the results from the BIS survey that 7 out of 8 jurisdictions in advanced stages are in emerging markets and developing economies. So Jamaica, for example, on March 22nd, 2021, the Bank of Jamaica announced plans for its CBDC. And they say it will be a hybrid CBDC, so a cross between wholesale and retail. And what's interesting is they said they will not use blockchain technology. They will use the existing payment system framework. They say that's efficient and enough. Also, currently, the BOJ does not have the right to issue digital currency as legal tender. So the BOJ Act amendment is also underway. And from now until December 2021, the CBDC in Jamaica will be tested. So as a pilot CBDC solution that will be tested in the FinTech regulatory sandbox. And the bank announced that they're planning on introducing the CBDC in early 2022. Then the Eastern Caribbean Currency Union is in advanced stages. If you don't know the Eastern Caribbean Currency Union, it was established in 1983, and the Eastern Caribbean Central Bank is the monetary authority there. It's a group of 8 island economies, namely Anguilla, Antigua and Barbuda, the Commonwealth of Dominica, Grenada, Montserrat, St. Kitts and Nevis, St. Lucia, and St. Vincent and the Grenadines. So on March 31st, 2021, they had the public rollout of the Eastern Caribbean Central Bank's CBDC, and it's called Dcash. And it's just a digital version of the Eastern Caribbean dollar. But currently, they did not roll it out in all the countries. They're doing a 12-month pilot in just a few countries, in Antigua and Barbuda, Grenada, St. Kitts and Nevis, and St. Lucia. So let's go to a different part of the world. Russia actually also just recently announced its plans for the digital ruble. In October 2020, they published a public consultation paper. And then in April 2021, they published a digital ruble concept based on this public consultation. And this concept describes all the specifics of implementation of the target model and the different dates. So what Russia is planning, they say by December 2021, they will create a prototype of a digital ruble platform. Then in January 2022, they will develop draft amendments to the central bank legislation in order to give the central bank the right to issue a digital currency. And then first quarter of 2022, they will launch testing of the prototype of the digital ruble platform. And all these papers, the digital ruble concept, the digital ruble, they're available on the Bank of Russia website in English. So if you would like to read more about this, you can just go to the website and read about all the details. So let's go to China, which is very interesting because it's one of the first, it's the first central bank of a major economy to roll out a digital version of its currency. You probably read about this in the news. There's several names for the digital currency. DCAP, which stands for Digital Currency Electronic Payment, then Digital Renminbi, Digital Yuan, or ECNY, but that's all the same. So currently they're doing pilot projects in several major cities, but no official nationwide launch date has been announced yet. So for example, one of the pilot projects took place in February 2021 in Beijing during Lunar New Year. They handed out a total of 10 million yuan, which is around $1.5 million. And they were distributed through about 50,000 packets of 200 yuan each, which is about $30. And recipients were able to spend the money at designated offline locations or on parts of an e-commerce website, JD.com. But those vouchers were only valid for a certain time from February 10th to February 17th. And the test was also only open to those with a Chinese ID number or with residence permits from Hong Kong, Macau, or Taiwan. And that was the third test of the digital currency. And then, yeah, other major cities, for example, Shenzhen, had similar experiments. So currently, the People's Bank of China doesn't have the legal authority to issue digital currency, and the law needs to be amended. So that's why on October 23rd, 2020, the PBOC released draft revisions to the law for public comment. And the important article there is draft Article 19. And that would say that in its amended version, renminbi includes both physical and digital forms. So that would be the legal basis for the PBOC to issue the digital currency. And the revision of the law is on the 2021 legislative agenda of China's National People's Congress Standing Committee, but only as one of the preparatory projects. And my colleague who covers China told me that means it's lower priority, so it's unlikely that it will be passed in 2021. So how's the digital currency in China structured? So the digital currency will be issued by the PBOC to commercial banks and non-bank payment platforms and other intermediaries. And those in turn will make the digital currency available to end users. And DCAP will be stored in digital renminbi wallet apps, so similar to other digital payment apps that people already have. But it's important to note, again, it would be a direct liability of the PBOC and not of the commercial bank. They only act as intermediaries, because otherwise it wouldn't fall under the definition of a central bank digital currency anyway. What's interesting, they said it will not be blockchain based. There will be conditional anonymity, they call it. So it means privacy by design is integrated into the CBDC. So the data provided by users will be tiered. So depending on the amount, there will be different accounts. So general account, premium account, depending on which one it is, there will be more data released or not. And then data access will also be highly restricted to alleviate privacy concerns. Supposedly there will also be support for dual offline payments, which means that both payer and payee can be offline. So similar to cash then. They say there will also be support for so-called smart contracts. So let's go to Sweden. Sweden's central bank started the e-krona project in 2017. In case you're wondering why Sweden's central bank is doing an e-krona project and why they're not part of the digital euro, why they don't have the euro, even though they're European Union member state. So all EU member states are part of the Economic and Monetary Union, and they coordinate their economic policy making to support the economic aims of the EU. But it's only a certain number of member states that have replaced their national currencies with the euro. And those member states form the euro area, and the European Central Bank is the monetary authority for those countries, which is currently 19 EU member states. But Sweden is not one of them, because they have not yet fulfilled all the necessary requirements for the adoption of the euro. They also don't have a target date. So they call member states with a derogation. So in Sweden, it's still the central bank, which is the monetary authority, and not the European Central Bank. So what's the purpose of the proposed e-krona in Sweden? They say they want to provide a public alternative to future commercial digital currencies. So one of the reasons that we talked about, and they also want to ensure that the trust in the monetary system is maintained. So those go together. If people flee to privately issued digital tokens, that might undermine financial stability. They say it's a technical solution that will most likely use distributed ledger technology, blockchain technology. And there's two phases in Sweden. So they just completed the first phase. And they issued a report after this phase was completed. That report, English translation, is also available on the website of Sweden's central bank. So you can look at that if you are interested. If you're familiar with our Global Legal Monitor website, my colleague also wrote an article about the report, which is available on that website. So you can also look at that. So in the first phase, the central bank evaluated what laws may apply to an official digital currency, whether or not the law of the central bank would need to be amended so they can issue such a currency. And they analyzed the different technical solutions of an e-krona in relation to anti-money laundering regulations. So the second phase will start now. In that second phase, they will bring in commercial banks and other market participants to test how it might work practically. The Swedish government has also tasked a group with investigating the future role of the national state, including the central bank in the Swedish payment market in general, and what role an official e-currency could play. But this report is not due until November 30th, 2022. So it's doubtful that we will see an official e-krona before that date. And the law would also have to be amended, or a new law would have to be passed to allow the central bank to issue an e-krona. So what about the European Union? I have this nice quote here from Christine Lagarde, the president of the European Central Bank. She said the euro belongs to Europeans and we are its guardian. We should be prepared to issue digital euro should the need arise. should the need arise, also indicates that they haven't made a decision yet on whether to launch a digital euro project. And they said they would make such a decision towards the middle of 2021. But on the other hand, they have done extensive preparations, which I will talk about now. Oh, and also just a quick remark, if you follow European Union news, in September of 2020, the European Commission published a legislative proposal on markets in crypto assets, also called MiCA, which would regulate crypto assets that fall outside the scope of current EU financial market regulation. But there's express exemption for central bank digital currencies. So MiCA would not apply to CBDCs. Oop, that was too much. I have to go back. Okay, here we go. So in October of 2020, the European Union's high-level task force, the Eurosystem high-level task force, published its report on a digital euro. And in that report, it defined a digital euro as a liability of the Eurosystem recorded in digital form as a complement to cash and central bank deposits. That's important. They say it will not replace cash or central bank deposits, which is one of the fears that suddenly there will be no more cash. For use in retail transactions available to the general public. And then they identified possible scenarios that would require the issuance of a digital euro. So they say, first of all, if there's increased demand for electronic payments in the euro area in general, then we should issue a digital euro. Or if there's a significant decline in the use of cash as a means of payment, for example, like it happened in Sweden, if that would happen in the euro area, there would also be a reason to issue digital currency. Then they say the launch of global private means of payment, what we talked about, for example, Facebook's DM, suddenly everyone likes it, everyone uses it. Those could raise regulatory concerns and pose risk. So that would also be a good reason that the central bank steps in. And then the problem of digital dollarization that we covered, if there's a broad take-up of CBDCs issued by foreign central banks and the European Central Bank would suddenly not be able to fulfill its functions anymore. Then in April 2021, a public consultation report was published. But like I said, they haven't actually decided yet, and they will decide by the middle of 2021 whether or not they will launch a digital euro project. But I just read an interview with Fabio Panetta, who's a member of the executive board of the ECB. And he said that if we do it, the earliest date for CBDC would be 2026. So that's still a little longer until then. So not as advanced as other jurisdictions. And then one of the things that would have to be discussed in the European Union is the legal authority of the European Central Bank, because currently it doesn't have the legal authority to issue digital currency. Article 128 of the TFEU just states that the European Central Bank has the exclusive right to authorize the issue of euro banknotes within the EU, and that only such notes have legal tender status. And then the member states are authorized to issue bank coins, subject to approval by the ECB of the volume of issue. So this is, first of all, they would have to amend the law to give them the general right to issue a digital currency, and then it would have to be decided, would it be digital banknotes or digital coins? So depending on that, it would either be the ECB in charge or the member states. So those are still just some of the questions that need to be discussed in the European Union. So let's briefly talk about the United Kingdom, because on April 2021, the British finance minister floated the idea of a so-called, what he dubbed Britcoin. He floated that idea when he announced the creation of a CBDC task force between the Treasury and the Bank of England, which will coordinate the exploratory work on a potential retail UK CBDC. But they have not yet made a decision on whether to introduce a CBDC. So this is just, they're looking at different scenarios. And for that purpose, they also established two external engagement groups. So one is called the CBDC Engagement Forum, which would engage senior stakeholders and gather strategic input on all non-technology aspects. So just the practical challenges. And then there would be a CBDC Technology Forum, which would focus on the technology aspects of CBDC. So what technology should they use? But they already mentioned CBDCs would be introduced alongside cash and bank deposits. So like the European Central Bank, they want to make sure that people know that it will not replace cash and bank deposits, that it will be equivalent to cash, but it will not replace cash because not everyone necessarily wants a digital currency. So let's switch to the United States. And I have another quote here from Jerome Powell, who's the chairman of the Board of Governors of the Federal Reserve System. And he said in April of 2021, it is far more important to get it right than it is to do it fast or feel that we need to rush to reach conclusions because other countries are moving ahead. So that shows us that the US is taking a more cautious approach with regard to CBDCs. It doesn't necessarily mean, though, that the US is not researching CBDCs actively. It just means that no decision has been made yet on whether to issue a CBDC. So, for example, in August 2020, Boston's Federal Reserve announced a multi-year collaboration with MIT's Digital Currency Initiative to develop a hypothetical CBDC. And what they do there, they're exploring the use of existing and new technologies to build and test a hypothetical digital currency platform. So they're focusing here on the technology aspect. And then there's also some bills were proposed in the House and Senate last year as part of the coronavirus relief response, which would have required the Federal Reserve to create consumer accounts and deposit central bank digital currency in them. Those measures didn't pass. They were called digital dollar wallets. In case you're interested, those bills were HR 6321 and Senate Bill 3571. But like I said, they didn't pass. This is something that we talked about before when I mentioned, the helicopter money. And then there's also some private initiatives that you might have read about. In May 2021, the US nonprofit Digital Dollar Project, which is a partnership between Accenture and the Digital Dollar Foundation, they announced a launch of at least 5 pilot programs over the next 12 months to test the potential uses of a US CBDC. And the goal of this initiative is really just to generate data on functional, sociological, business uses, benefits, and other facets of a US CBDC. And so that this data can be used in research, in the public discussion, as well as inform policy considerations by Congress. They also published a white paper. So this is also something worth looking into and a very interesting development. And in some of the advanced economies, like the United States, the question or the reasons for issuing CBDC could also be just making payment systems more efficient. So the question is really, is a CBDC necessary, or can we just improve the current system? For example, the Federal Reserve is working on the so-called FedNow service, which will be a new instant payment service, which would enable all financial institutions to provide safe and efficient instant payment services in real time, around the clock, and every day of the year. So that might actually be an alternative for advanced economies if this is the only reason why they're introducing a CBDC. So if it's one of the other reasons, or if it's in a more emerging market economy and they're really looking for financial inclusion, then that would obviously not be a substitute for this. But yeah, this is just one of the considerations. Okay, so this concludes this part of my presentation. We will now move on to the Q&A. And like I already mentioned, if I don't get to your question, or if you have a question later on, you can always submit them through our Ask a Librarian service. You can see the address here on the PowerPoint. You can also just go to law.gov. There's also a link to it. And I would also like to mention our next Foreign and Comparative Law webinar on June 17th, 2021. It will be on new laws of China and how to find them online. So, for example, if this presentation got you interested in China's digital currency and you want to research that more, it would probably be a good idea to attend that webinar to know how you can find Chinese legislation. Okay, so I'm going to take a second to look at the Q&A. And then I will answer those questions. So just give me a second. I see the first question. I guess we already answered that. What countries are currently looking into utilizing, implementing a CBDC? So the ones I mentioned were the most interesting ones in my view. And it's really like a lot of advanced and emerging market economies that are looking into. There are others that I did not mention that are maybe in a more advanced state, but those are the most interesting ones and the ones that have been in the news lately. The question, I have another question here. What would be the motivation for a private company to issue a digital currency? For example, Facebook said that they, they're a big company. They would like to, provide services to people. I mean, this has been criticized a lot. I've seen other digital currencies issued by private companies. They also mention other reasons. I can't think of the name of, I saw another one. They said that one of the reasons they would like to issue a digital currency is financial inclusion. So they're similar to the emerging market economies. So in particular, with regard to cross-border payments, they say it would help. So, the name was Silo, I think, which is a blockchain payments platform. They said their main reason was financial inclusion. The problem, though, with financial inclusion is also normally you need a smartphone for all these digital apps. So sometimes people will not have the smartphone. So there's a question if you can really achieve financial inclusion with the CBDC. So then there's a question about the fear of replacing CBDCs replacing cash or bank deposits. And the usage of credit cards. Do we know how credit card companies might react to CBDCs? I guess we already, we actually heard about this with regards. We know that a lot of companies were supporting Facebook's Libra at the beginning, or Facebook's Diem, and then after criticism decided to end their collaboration. So they're definitely interested and they're keeping track of all this. And depending on how the individual CBDCs are structured and designed, with the different, like how, what type of wallet providers there will be, for example, then credit card companies might, actually participate. So that's something to be seen, but I know they're definitely all watching it. We've seen news that they're getting more involved with cryptocurrencies. So I'm guessing they would also be involved in some way with central bank digital currencies. Let's see. So there's also the question, what's the difference between a digital currency and electronic bank deposits? So electronic bank deposits are digital currencies. So there's no difference. It's electronic bank deposit is a type of digital currency. The question, if CBDCs are widely adopted, what would that mean to Bitcoin and other digital currencies in use? So that remains to be seen. Because the CBDCs would just be a digital equivalent of cash. So central banks are hoping that people will, use the central bank digital currencies, which are a safer alternative than Bitcoin and other cryptocurrencies. So people might not. So what they're hoping is that the CBDC will be used as a means of payment and not Bitcoin or other cryptocurrencies anymore. But the thing is, cryptocurrencies will not go away just because central banks suddenly decide to issue digital money. It's what I talked about, that as long as people think that they're a store of value, and then they will still be around, especially Bitcoin will still be around. Although the only problem with Bitcoin is, I guess, there's a fixed supply, whereas fiat currencies, central banks control the supply and they can increase it, and which they have done, for example, in recent years with their quantitative easing programs. So, I mean, what central banks are hoping, if there's a high uptake of cryptocurrencies or by the public as a means of payment, and then central bank digital currencies are issued, that people will come back to the central bank. They will not be replaced. And normally from that opinion poll, it's most likely because people trust the monetary institutions more to issue digital currency. It's most likely that people will then use them more. But like I said, I don't think it will still definitely be an investment opportunity for people. So that will definitely not go away. I see a question whether or not there's any effort to develop a global digital currency. I have not read anything about a global digital currency. And that would also be difficult because one of the definitions of a central bank digital currency is that it's in the domestic currency. So that probably wouldn't work. I mean, there's something to think about, maybe special drawing rights from the IMF. But I haven't really read anything about that, there have been, debates about that. Will the market price of the digital currency mirror the country's currency? If they will be just a digital equivalent of cash, then yes. So they will be the same. So you can either use cash or you can use digital currency, whatever is more convenient to you. I also see that are there any concerns that cryptocurrency will disintermediate central banks if the central banks don't move on issuing CBDCs? Yes, for sure. So that's really one of the reasons why central banks are looking into issuing CBDCs. And because I mentioned cryptocurrencies issued by corporations or other private digital tokens are very volatile. There's no good consumer or investor protection. So the functions of the central bank to maintain monetary and financial stability are at risk if they don't act. I see there's a lot of questions here. And it's already actually past our time. So I apologize if I did not get to your question. Like I mentioned, you can always submit your question through our Ask a Librarian service. And I will try to answer all of those. In the slides, I also included links to some of the documents I talked about today. So when you receive the slides, you can click on the documents and then read more about it. And I wanted to thank you all for attending the webinar. And we hope to see you soon again on our next webinar. Thank you very much.